It's that time again, guys. We are live. Welcome back post Thanksgiving. Hopefully, everyone did not eat too much turkey or maybe steak or mashed potatoes. My favorite, pumpkin pie. But, anyways, I ate a lot of that. But hopefully, everyone's doing great. And thank you for coming off that post holiday, time with your family, friends. And hopefully, you have a chance to tap into the data, the most recent data here for the Phoenix housing market, guys. And it is not all roses right now. So we're going to hop into this and figure out what's going on, where maybe the market's heading towards the end of the year, guys. It is the 1st of December, or I should say specifically December 2nd, and we are in 2024. Guys, what is happening to the housing market? Where do you need to be? And I'm glad you're joining us here today to get the news front and center, the data over drama right now. So let me just jump in here, share my screen, and we're going to rock and roll, guys. Here's the Cromford report. Here is the daily commentary from yesterday, December 1st. The contract ratio for all areas and types has dropped below 30. This signifies, a cold market and a 29.6%, or 29.6 as the rating. It is the lowest level seen since April of 2009, guys. It is below 30. At 29.6, it is the lowest level we've seen since April of 2009. Downward pressure on prices is starting to build as more sellers try to attract a relatively small pool of buyers. Guys, that's exactly what we're seeing right now. So we're going to dive into this a little bit here, guys, but let's just go over what that means real quick, all right? Now, what were you guys doing in April of 2009? Do you remember? Were you around? Were you old enough? Maybe some of you guys are younger here. Were you old enough to remember what was happening then? Or do you clearly remember what was happening? Guys, I am one of those. I clearly remember what was happening, guys. In April 2009, the market had not hit rock bottom here in Phoenix. Now, I can't speak for the rest of the country, but I know the rest of the country, the housing market was not doing great. Bear Stearns, Lehman Brothers, AIG had all went bankrupt or declared bankruptcy in the summer of 2008. And Phoenix had already been in the mud for about a year and a half before that even happened. I was doing short sales and REO, bank foreclosures, and helping do that because that was the only thing you could find. People's equity were being eliminated by the day, literally by the day. You could see values in a neighborhood dropping by the day or week, not the year. It was a wild time, guys. April 2009, the market was still heading in a downward fashion, but no one knew where the bottom really lied. Well, come to find out, the bottom really ended up being around the third quarter of 2010 for Phoenix, but we had a double bounce from being down, up, back down because of the first-time homebuyer credit the government was offering at the time. But it was not a good time regardless. In fact, we're going to pull up an article here. I'm going to show you what that looked like in 2009, guys. Here's an article from the New York Times, okay, dated April 28th, 2009. Right here. You can see it right there. Okay. Phoenix leads the way down in home prices. So let's give a little context as to what was happening. Phoenix has achieved the unwelcome distinction of becoming the first major American city where home prices have fallen in half since the market peaked in the middle of the decade, according to data released on Tuesday. This is crazy. Even during the Great Depression, I'm not sure prices fell this quickly, said Carl Gunterman, a professor of real estate at Arizona State University. Okay. And so this was the market at this time, guys. It was bananas. I was selling real estate, guys. I got licensed in 2005 and was selling real estate in 2005. And up to this point, it was the Wild West. It was crazy what was happening. Home prices in the 12th largest metropolitan area at the time in the Sunbelt city of Phoenix dropped 4.5% alone in February, according to the Standard & Poor's Case-Shiller's Home Price Index. We're going to talk about that a little bit here in a second, okay? Prices in Phoenix are now down 50.8% since the market peaked in June of 2006. For the country as a whole, the Case-Shiller numbers offered the thinnest of silver linings. Things are still getting worse, but more slowly, guys. That was the silver lining. Hey, guys, look, they're going to get worse, but it's going to get worse, maybe a little bit slower than it has been here in the last year or so. In February, prices of single-family homes in 20 major metropolitan areas fell 18.6% from the year earlier, compared with a record drop 19% in January, guys. So things are not good. You can see what is happening right here. Mr. Blitzer said the decline in Phoenix outpaced any during the recession of the early 1990s, which for reliable figures are available. Okay. It is wild, guys. Talks about the Great Depression right there. And you guys, I think, are starting to get the point. Okay. The nearly 51% drop in Phoenix is not an isolated plunge. They're talking about prices in Vegas down 48%, Miami 45%, LA, San Diego, etc. So it is wild what was happening. According to the National Association of Realtors, the median price of a home in the United States, which peaked above $230,000 in 06, fell to $175,200. Wouldn't that be nice, guys? Yeah, it would be. But those days, I think, are gone for maybe ever. We'll see. But I want to give you perspective on where the market was in 2009. Because, again, the contract ratio for all areas and types has dropped below 30. It is a cold market and the lowest level since April of 09 for Phoenix when it comes to the contract ratio. So what is the contract ratio? I'm glad you asked, okay? By the way, if you don't believe me, here we go. We're going to pull up this expanded market index, guys. There are now 24,178 homes and condos, townhomes, etc., on the market for sale in the Phoenix area. Okay. You can see just 2 years ago, it was at 21,000. Last year, only 18,000. That was good. We had a more demand this time of year in Q4 of 2023 for whatever the reason. We just had more demand. Okay. Now we have less and we have more people putting their homes on the market. All right. But that will curtail, that will decline heading into the Christmas, New Year's Eve time of the year here, right? Contract ratio, you can see it right here. Okay. 29.6, like they just said. Okay. Last month is at 32.5 right here, 36.1. And then last year is at 36.7. So it's not like it took this drastic decline down, but it has slowly been eroding. As you can see right here, the market index here overall for the Cromford market that measures supply and demand for the entire Phoenix area is 86.7, guys. And if you've been following our show, you know that this has been declining here slowly, but surely over the past 5-6 weeks, unfortunately. So you can see right now that the balanced market for Cromford market index is between 90 and 110. We are at 86.7. We are officially, ladies and gentlemen, in a buyer's market. And we have been in a buyer's market now for several weeks. You can see right now the reason why. Supply is up. We are not, it's green, meaning supply is up, but it's still relatively low compared to what it normally is or could be. Okay, so that's good. That's good because if this supply gauge was over here at 160 in the red, prices would start to be affected in a great big manner. Okay, demand. It is low, guys. It is below the supply index. The supply index comes in around 90. Demand's around, was about 78, 77. So it's low, guys. We have weak demand right now, and we've had weak demand for a while. And I think, guys, that buyer fatigue has a lot to do with this. I do. And buyer fatigue's primarily stemming from interest rate fatigue. That's right, guys. The interest rates have been around 7% plus or minus for multiple years now. And I think last year, people were like, you know what? Screw it. It's not going to go anywhere probably. So let's just dive in and buy some properties. And that's why you saw more demand in the Phoenix area in Q3, Q4 of 23. And I think the reason why you're seeing less now is because people are like, well, it's still not moving. And so, maybe we should just hold tight and see where the market heads in 2025. And so that's what I think you're seeing right now, unfortunately, for better or for worse. Okay. So that's where we're at. Now I'm going to share my screen and head back over here. And you can see that we're going to jump into this contract ratio issue. Okay. Contract ratio. First of all, what is it? Well, before we get to that map, let's go over what this is. Okay. Here we go. The contract ratio is defined as the count of listings under contract divided by the count of available listings times 100. All right. So between 0 and 20, it is cool. Now we're at 29.6. It is the lowest since 09. But according to this, technically, it's not the worst, right? Because we're not actually even in the cool section. We are in the warm section at 21 to 40 on the contract ratio across the Phoenix area. You can see if it goes above 40, you're in the warmer section, which is where we would love to be because that's a little more balanced at that time. Okay, but for example, if the contract ratio is 115, that means for every 100 available listings on the market, there are 115 under contract. If the contract ratio is at 15, then for every 100 listings, 15 under contract. So right now at 29.6, guys, we have 100 listings on the market. We only have 29 that are under contract with pending offers or contracts. Okay. So right here, here's the zip code, guys. You can see the areas of the valley that are colder than others. You have cold being blue, warm being the green, hot being the light orange. Okay. So you have these zip codes right here that are hot. Where are these? I'm glad you asked. This one's 85259. This is in East Scottsdale. Contract ratio of 70. Okay. So now if you go into this area, you should be expecting maybe to not have as much negotiating power when looking to purchase a property today. You go over at 85254, which is the magic zip code in Scottsdale. A lot of non-HOA neighborhoods in this zip code. Great central location. It's at 62. You come down here into Chandler, 85224, 68, and 85284 at 65. Now, you can see a lot of the higher ends here. Here's Paradise Valley right here, 85253. Where are you at? There you are. Okay. You are in the blue. You are cold. You're the highest price points in all of the Phoenix area. And you are in the blue at a contract ratio of 28, which is not horrible given the high price points and the fact that the overall contract ratio is at 29. So not that bad overall. But even the West Valley over here, guys, in Glendale, 85345 usually has a pretty high contract ratio. Prices are down. Prices are, not down. Prices are just a little lower overall compared to most other zip codes across the valley. But you're still only at a contract ratio of 37. Then you go over here, which is even more interesting. You have Goodyear, which prices are even a little bit more affordable in most cases. Contract ratio of 28, 28. And then down here, Australia Mountain Ranches and so on and forth, 24. Now, why might that be? Well, I think a lot of that's due to new construction. You have a lot more competition in these areas out here because a lot of new construction is happening here in the West Valley and, of course, down the Southeast Valley. And, of course, Santan Valley down here, 85143 is at a contract ratio of 29 down in the Southeast Valley. So let's look at the graph on this. You can see right here, contract ratios measured. Here we are, guys, coming to this week right here. We are at 30 or 29, just dropped below 29 because this is measured just a couple days ago. Over the last 2 days, it actually went down a little lower in the 29 range, okay? But as of November 30th, it was at 30. And you can see that is the lowest. Now, you go back here in 22, you can see at 32 right here, 30.8, okay? You can see that they were low also in the low 30s in 2022. Guys, remember what was happening in Q3 and Q4 22? Interest rates were skyrocketing because the Fed was jacking them up because inflation started to get out of control. And that's when the housing market came to a screeching halt. You can see right here, look at this. When rates were in the 2s and the 3s, you can see what was happening. The contract ratio, look at 256, 253, 251. Guys, it was on fire. Insanity. There's the word insanity. It's so true. It's so true, right? And then, of course, as the market started to cool off a little bit, although still really good with contract ratios around 156, in the 130s, 120s. And then all of a sudden the rate started being jacked up around June and July. And you can see it starting to curtail all the way down towards the end of the year, December 25th of 2022. We're at a contract ratio of 34.8. Okay. So now you can see the seasonality too, which also affects the contract ratio. But I wanted to get this out to you guys. This is very important. So now I'm sure you're asking, okay, Kelly, this is a lot of doom to an extent, maybe a little gloom too as well. What's that doing to my price of my house? And if I'm looking to buy, does that mean everything's on fire sale and I should go out there and buy? Well, there's certain areas that are going to be better than others to purchase right now. We will establish that here in just a few minutes. But it also means that prices, guys, as I'm going to show you here in just 2 seconds, haven't just fell off the cliff. They haven't. And I think a lot of it's because supply is still somewhat under control. Let's look at this graph for a median price point, okay? Let's go right here, guys. And here's where the rubber meets the road. Median monthly sales price. Here it is, guys. You can see right here that in September 24, it was at 445. October, it jumped up to 450. And in November, it stayed flat at $450,000. So even though the contract ratio is decreasing, and even though the CMI, Cromford Market Index, is going down from 89 to 88 to 87, 86 now, overall, prices are still holding at this time, guys. And we like using the monthly median because that is comparing month over month. But most importantly, it's not skewing everything based upon maybe some luxurious homes that are super high price that are selling, skewing the actual numbers, right? And so this gives a good representative of the price points and prices overall when you look and take the median. All right. So that is that. And let's go to annual median. And you can see right here that this is interesting because it's actually increased from where we were at this time, 2023. We're at a median price point of 439.90. And today, 1 year later, approximately, we're at 449. That is an increase, obviously, of about $19,000 on the median sales price year over year, even though there's not a lot of demand. So what do you make of that? Well, Kelly, we think affordability is too high and we need these prices to come down. Well, I think we all would like that to an extent. I mean, there's some people probably would be against that if they own a ton of real estate, or whatever it may be. But overall, that would be great for the market if things are more affordable. But also, affordability comes through interest rates as well. Guys, if we can get inflation under control, then the Fed has less pressure. The Fed can bring rates down a little bit. Man, if we had rates in the low fives, how great would that be? Maybe even the high fours. That would be phenomenal. The locked in effect of a lot of these people who are locked into the rate of 2.75 or 3.25 might just move and sell their house and buy something different if they can get something in the high fours, low fives. Potentially, not everybody, potentially that would unlock some transactions and allow more things to occur. But we'll see what happens there, guys. But you got to start by getting inflation under control. Now let's go over to the Case-Shiller Index. I told you I'd bring that up, and here we go. Home price growth slows in September, according to latest Case-Shiller report. Guys, you're probably thinking, well, hold on, Kelly. We're just talking about November. We're in now the 1st of December. Yeah, we are. And this is the downside to the Case-Shiller Index. It is very accurate, but it lags 3 months behind in many cases, 2 to 3 months. And so let's just look at it for perspective, okay? So let's go in here and read this article because I have a graph to show you as well. But the Phoenix year-over-year home price growth slowed in September compared to summer trends, but the Valley still registered one of the biggest month-over-month increases among major metro areas nationwide, okay, according to this report. And right here, you can see that home prices were up 0.3% in September over the previous month in the Phoenix metro area. Between July and August, the Valley's median actually dropped slightly, and the only monthly decrease of 2024 because the summer was just naturally slow due to the seasonality of our market. The indices showed the median home price in Phoenix were $329,970 in September. That price is 1.8% higher than the median a year earlier, but the year-over-year growth rate is a drop from August of 4.25%, which was a nice little increase there in August. Okay. Now, guys, why is the 1.8% a little bit different than what I just showed you in the graph? Is because this is the Phoenix metro area and the Phoenix metro area, the Phoenix area alone. What I'm taking into consideration on the Crawford report is all the suburbs, the entire MSA area from Santan Valley way out to Surprise and down to Buckeye and so on and so forth. So it takes a little bit some of the numbers a little bit more. I think it's a better picture on the Crawford report personally than the Case-Shiller, but this still gives you an accurate index, I think, of where we were a few months ago. Okay, just to show you by comparison, and we're going to show you comparison with some national cities. All right, so mortgage rates now under 7%, not by much. Matter of fact, I'll just show you to you right now. 30-year fix. Here we are, guys. We are at 6.91%. That's where we're at. Okay. So unfortunately, we are just a smidge below 7%, but it's better than being above 7%. Let's be honest about that. So there you have it when it comes to mortgage rates. Now back to the article. Only one city, Cleveland, of all places, at 0.6% out of the 20 U.S. metros measured, saw September month-to-month grow higher than Phoenix's in the Case-Shiller report in that month of September, guys. So, guys, Phoenix came in, here you go, at number 2. Boom. Number 2, guys, of all these 20 major metros, guys. So that's actually pretty good when it comes to the median price point, okay? And then you can see right here, Phoenix has risen from 6th to 2nd place over the last month. The national average was down 0.1%, so Phoenix was somewhat better than this average. California was the worst performing area for price growth, okay? Comparing year over year, we see the following changes, okay? Phoenix came in at number 16. Year over year, okay, not month over month, year over year, we're up 1.8%. So we're up regardless year over year or month over month when it comes to the Case-Shiller Index, which again lags about 2 or 3 months behind. But finishing off this article, I just want to show you guys that right now the Midwest did pretty well overall. New York, Cleveland, Chicago, but Phoenix is still one of the best places to be when it comes to owning a property or real estate at all in the country, I should say, guys. Okay, and there's the numbers from Case-Shiller Index, guys, and here are the Here are the suburbs. All right. The suburbs back to actually, no, we have a more recent one. Here we go. November 28th. And there's a lot of red on the board, guys. But if you want to know where the best place to buy a house right now in the Phoenix area, if you want all the negotiation power on your side, here you go. Buckeye. There it is. Maricopa. And guys, I know it's a falling knife. It seems like a falling knife. And who wants to catch a falling knife? Nobody. So people sit there and they wait until it reverses. And then it's like, oh, let me jump in now. Well, you can jump in and still get a good deal because you probably won't miss it by much in terms of the bottom. But when you do that, you also lose negotiating power and leverage. Guys, right now, I can almost guarantee you we, on your behalf, could get you a mortgage rate buy down on any property in these areas because we have the leverage on our side. Prices, as you saw, are not falling off the cliff. It may be hard to measure a good deal, quote unquote, by the amount of money you get off the asking price. However, if you can get a mortgage rate buy down for 3 years, that gives you a much lower monthly payment and therefore makes your home much more affordable for the next 3 years. And hopefully inflation gets under control. Hopefully we get rates to come down because inflation eventually gets under control. Obviously, it's all unknowns. We don't know. But right now, what we do know is that if you want to buy a property, Buckeye, Maricopa, Queen Creek, Goodyear, Surprise are all in pretty big time buyers markets. Then you got balanced markets here with Peoria, Mesa, Gilbert, and Paradise Valley, Tempe, and Glendale. Sellers markets, Cave Creek, Avondale, Phoenix, Scottsdale, Fountain Hills, and number one on the list, Chandler, Arizona, the Silicon Valley of the Southwest, right? With the headquarters of Intel and a lot of tech jobs still being created down that area. I know Intel's not going through a great time right now. I think I saw their CEO just got fired, but they obviously are a big juggernaut for that area, providing a lot of good, high-paying jobs. Now, let's pivot real quick. Speaking of which, and let's go over to here where it says, according to a new report, Phoenix remains one of the top cities in the entire world, not just the country, from the annual survey of, which article is this? The 2025 World's Best Cities Report came in at number 89, guys. So it's not number one. That's fine. But it's in the top 100 for the best cities in all of the world, the globe. So that's not a bad place to be. They actually have been sliding as just a few years ago, we were at number 49 and then 55, 76, and now 88 as of last year and 89 heading into 2025. So still one of the most dynamic cities in the world. And I would agree that it is a great place to be, not just for today, but into the future as well, especially with all the growth. But I got to give a little nudge to our little brother Tucson down the road, 2 hours or so. All right. They came in at, I forget what it was, higher than us, came in number 77. Here it is, number 77. We're at 89. It's all subjective, obviously. And then, of course, if you look at a different report, then Tucson could be higher or lower. It just depends on what report you look at. But overall, Phoenix makes that top 100 no matter which report you pretty much pull. That's a good thing. All right. A couple development thing, guys, I think you guys should definitely know about. Tempe South Pierre developer adds investor, eyes more faces. Guys, this place is going to be awesome. This area, this view, I don't, like a ton, but they are building huge skyrise buildings, and they're building them pretty fast on the water, the Tempe Town Lake, in the right there in the heart of Tempe, guys. And you can see it's one of the largest projects that the Valley has ever had and is currently approaching $4 billion in total construction costs, guys. You are going to have down here multiple towers, and you're looking at, where's the numbers here? I just had it. There they are. 624 for rent apartments, 80 for sale condos, 2 hotels totaling 520 keys, and 2 office towers, along with potentially dozens of street-level retail and dining options. A multi-acre entertainment district at South Pierre is also expected to eventually feature nightlife, concert venues, fountain shows, and yes, a gigantic Ferris wheel, guys. This is going to be a phenomenal place to call home, whether you rent or buy or work potentially, or just want to hang out on a Friday night. But this is coming, and this is hopefully going to be done in 2026, slated for completion in 2026. And it is going to be beautiful, guys. The renderings look amazing. This picture does not do it justice, okay? And then also, too, if you have a corporate jet and you are thinking about maybe having a campus to park it in that you can fly right out of, in and out pretty quick, this is a great option for you. 75% of these corporate jet hangars are already pre-leased out. There are 25% remaining. Let us know if you have any interest in that at the Phoenix Deer Valley Airport, which is located just in the North Phoenix area. And it's great because there are no commercial airlines that go into there. And there are a lot of of central locations, central location there to basically get to wherever you want to go once you land at the Deer Valley Airport. Okay, so I thought it's pretty cool because you don't have a lot of these. It's becoming more and more popular, but they're building campuses in Chicago, Dallas, Denver, Houston, Miami, Hartford, Connecticut, Orlando, Florida, Salt Lake City, San Jose, and Washington, D.C. And this is becoming more and more popular where people are wanting hangar space for their fractional ownership of their jet or their full ownership of their jet, with corporate or not. So that is a great place. Let us know if you have more questions on that. That's a good picture of it right there, showing you what is happening. Okay, guys, that is going to basically cut it for right now for the rest of our Monday edition here, post Thanksgiving of YouTube Live. And I just wanted to go over a couple more things. Nope, we covered it all. Rates are still holding steady right around that 7% or just under. So hopefully they continue to come down, guys. What do you think about where the market's heading for Phoenix the rest of this year? It's kind of chilly right now, but there are still people buying and selling houses, and we are finding them. We just sold a property over the weekend using our Black Friday special, by the way. That was pretty cool. So anyways, guys, if you have any questions, we'd love to talk to you. 480-660-5974. Call us anytime you want. Shoot us a text. We'll get back to you right away and schedule a time to chat with you, or whenever it is convenient for you. All right, guys, thank you so much for spending your time with us here today. And until next time, Phoenix, keep it classy. Take care, guys.